With historic low interest rates and more people looking to move into a new home, but many might be unsure of how to make the market work in their favor. Here to help and sharing some tips and strategies on how to get you into your dream home is Hall Financial President and CEO David Hall. David, thanks for being with us this morning.
Good morning. It's great to be with you.
So interest rates, as we know, they've been low for quite some time. So if you haven't refinanced yet, have you missed the boat?
Well, the answer is no. And right now, a lot of experts are calling this your second chance to refinance right now, just because of the fact that back in January of this year, we saw rates hit an all-time low. They went up a little bit over the next 4 or 5 months. And then July, August, we saw them dip again. So a lot of folks that thought they missed the boat, which was nearly 14 million Americans that were still really in the money. They could save nearly $300 by refinancing a month, which is a lot. You don't need to save that much to make it worth it. Anyway, it's a great opportunity right now, and you definitely have not missed your chance. And if you procrastinated, which is easy to do when it comes to a refinance, you should look into it again right now.
Good to know that that window is sort of still open. Now, with the storms that we have experienced this summer, how can refinancing potentially help Metro Detroiters recover and pay for storm damage? I know thousands of people are still dealing with it right now.
Yeah, it's been a really unfortunate summer for a lot of the Michiganders, and I feel for all of them. I think that the good news with being able to use maybe some of the equity in your home is that for every $10,000 that you pull out, on average, it's only $40 more in your payment. So on average, if somebody wanted to pull $20,000 of cash out of their home, because we've seen home equity rise, because they might have a need, whether it be for a bad situation or even a home renovation, you're talking about an $80 increase in your payment only for $20,000. That's an average based on today's interest rates, but certainly a great opportunity right now for homeowners that have equity that need to find some extra cash to go ahead and do that. And if not, if you don't need it, that's great, because you've gained a lot of appreciation on your home over the last couple of years. In fact, the last year's been a record. So homeowners have really put some money in their pocket, either for now or for the future.
A lot of people, I'm sure, are thinking about that. Now, 20%, that was the number that all our parents always told us. You need 20% down when you buy a home. Is that still the magic number?
Well, no. And certainly a lot of things in the business have changed over my 25 years. And one of them is a lot of folks are putting down 5, 10, 15%. In addition to that, you don't even have to do a 30 or a 15 year anymore. You could pick your term. You can have 20 years, 23 years, 18 years. So it's much more customizable today in terms of your situation. We have folks that are out there shopping for homes that may only have $8,000 or $9,000 total that can purchase a home, and that includes everything. So 20% down is sort of old school myth, certainly a nice number to get to, but you don't need 20% down anymore. We have a lot of folks all over the country that are putting 5% down, getting into homes and participating in this appreciation of what's gone on with home values over the last few years.
Really important tips there. David Hall with Hall Financial, thank you so much for joining us this morning.
Thanks. Appreciate the time.